Hello, hello. Hey, hey, hey. I glad all of you can join us for our meetup. Can you guys see us now? If you can, just say something. Say hello in the chat group. Probably a lag here, but yeah, super happy to have all of you here. It's a lot of you over here. There's over 124 people here. If you can hear what I'm saying right now, I would like to know where are you from. So do write in the chat group, where are you from? Would like to hear where you're from. Like, just let us know where you are. Luxembourg, yay, you can hear us. Awesome, awesome, this is working. UK, Australia, Singapore, London, got everyone around here. I'm guessing the time's perfect for everyone in Asia and European time zone. It's perfect. Rome, Malaysia, Hungary, Cape Town, Belgrade, Serbia, Toronto. Oh, Toronto, that must be late for you. Felix must be super late. Malaysia, Portugal. Hi, Malaysia's friend of me. Bali.
Oh, wow. I don't see anyone from Japan. So
yeah, you're the only one from Japan at this point in time.
It's okay.
So yeah, I just want to say welcome to all of you to CoinGecko's second meetup. I'm guessing let's just give it a couple more minutes for some of the latecomers to come in and join, and I'll start with some of the introduction of our speakers today. Just a quick introduction for those of you who are early. We have three distinguished speakers here. We have Edward Evenson, Director of Business Development at SlushPool, an OG mining pool that's been around since 2010. We have Koji Higashi, founder of Koinup. He's from Japan, a huge influencer, YouTuber from Japan. He knows everything in the space, very well read. We also have Alejandro de la Torre, Vice President of Poolin, a large Bitcoin mining pool as well. So we have two large mining pools, and we have a lot of questions that you guys can ask for today. It's going to be a very free and easy session for us. I'm going to be asking a few questions, and I'm going to allow all of you to also ask questions. So keep the chat going, keep it lively. If you have any questions, just ask there, and I will pick some of the interesting questions to ask. Yeah.
Okay.
All right. So yeah, thank you very much for taking the time to join us today. This is, as you are aware, second CoinGecko's meetup. CoinGecko, as you know, is the world's leading crypto data aggregator. We pride ourselves in being independent and neutral. We do our best to display crypto data in the most accurate way possible to help you navigate this industry. We have one of the most comprehensive database. We track over 7,000 coins from over 400 exchanges. For this second meetup, we are hosting it in the late afternoons for us over here in Malaysia, so that it will be perfect for the Europeans. Not so great time zone for the Americans, but the last time we did it for the American time zone where the European was late at night. Maybe the next time around we'll try something different where it'll be late for us, very late for us, 10, 11 p.m., but like afternoon for the Europeans and morning for the Americans. So let's see how it goes. Seems to be doing quite well. Super happy to see all of you today. We now have 140 live people in this chat group. Super awesome. So yeah, there's a live chat on the right side of Crowdcast. Let's get something going. So all of you have already told us where you're from. Super happy to see all of you. So yeah, so during this live chat, when there's feel free to type in any of your comments, feedback, questions during the Q&A. I'll be monitoring them, moderating them, picking interesting questions. So for today, the main topic of discussion is actually on Bitcoin halving, or Bitcoin halvening, as some of the OG used to like to call it. It's scheduled to happen roughly 3.5 days from now, probably sometime on Monday night, Tuesday morning, sometime around there. We at CoinGecko are very excited and are watching the countdown timer that we have. So at the bottom, there's learn more about Bitcoin halvening, where you can click on it and see the timer. For those of you who are not aware of what this halving means, is the day when Bitcoin's block reward is scheduled to go down from 12.5 BTC to 6.25 BTC per block. This means that for every block that a miner mines after this event, only 6.25 new Bitcoin will be minted and given to miners. this block halvening happens every 210,000 blocks, or roughly every 4 years. So it's like a big birthday to look forward to. It's kind of like having your birthday on the 29th of February, where you can only celebrate once every 4 years. So yeah, we're all in the crypto industry, we're all Bitcoin industry, very, very excited that we get to celebrate this birthday after 4 years of waiting. And for today, we have really 3 honorable guests joining us. I forgot to introduce myself. My name is Bobby. I'm the co-founder of CoinGecko, so I'll be moderating the panel. And with us today, we have 3 distinguished guests. We have Alejandro de la Torre, Vice President of Poolin. We have Evenson, Director of Business Development at SlushPool, and Koji, founder of Koinup, and he's very familiar with the Asian Bitcoin scene and also the Lightning and Liquid network, which we'll talk about some of the developments shortly. So welcome to the show, gentlemen. We're happy that you're able to join us. Yep.
Excited.
Yeah. Maybe for a start, right? Let's kind of keep things simple. Like, give us a simple introduction of yourself, what do you do, and how do you first end up buying your first Bitcoin?
Well, I'll start. My name is Alejandro de la Torre. Thank you, CoinGecko, for organizing this. VP of Poolin. Poolin is a mining pool, one of the largest Bitcoin mining pools. We also mine a handful of other coins. Before that, I was co-founder of BTC.com, another big mining pool. So we have, and the rest of the co-founders of Poolin, we're also the co-founders of BTC.com. So in all, we have a lot of experience in the mining pool industry. Now, my first Bitcoin I bought in 2013 because I thought that this is a great tool for financial freedom, and I believed very much in it. Those days were the early days, I'd say. But it's been ever since I bought that first. Well, it was not even a whole Bitcoin. I got into Bitcoin and I never left. That was it.
Hi, I guess I'll go next. Sorry, Koji. I'm Edward. I'm from SlushPool. We've been around since 2010, as Bobby mentioned. We're actually the inventors of Stratum V1, which is the mining protocol that all the other mining pools currently use. Stratum V2, currently under development, which we support a version of right now. Open source mining protocol. Anyone's welcome to tinker with. As far as when I got into Bitcoin, I knew about it for a while before I actually jumped in and bought my first one, just because friends in university were kind of tinkering around with it. While I was studying like econ and history, a lot of my friends were in computer science, so they were talking about it quite frequently. But it was always kind of just something in the background. It's not something I really dove into until around late 2016, when I was living in China. I had just moved to Shanghai, and after I fell in pretty hard, pretty quick. Several months, maybe like 6 months after fully getting into Bitcoin, I started working for a mining company based out of Beijing called F2 Pool. And then after spending about, I think, 3 years in total in China, decided I wanted to change the scenery, and I got an offer from SlushPool. So I moved out to Prague, and I'm working for them now.
Cool. Okay, so hi, I'm Koji. I've been involved in the Bitcoin space since 2014. I've done different things, but mostly in product management and media. So I was doing a lot of token stuff pre-Ethereum, using counterparty protocol on top of Bitcoin. Probably not many people remember this, but yeah, so I was doing like digital collectibles, stuff like that. A little bit too early, but yeah, and also I do some media stuff, mostly in Japan. I bought my first Bitcoin right after the Mt. Gox incident, which took place in Japan, actually. So around the time, all the Japanese mainstream media basically said, oh, it's a scam. And some random French guy got arrested or something like that, right? It was very, very shady at the time. So I was like, oh, I looked at it and, oh, this must be like a scam. But what is this? Like, what is this Bitcoin thing? So I decided to look into it a little bit and saw a lot of like, decentralized money, etc. And just started asking myself a lot of questions that I didn't really think about before. And then ever since then, I just did, as I did more research, I got more just excited about it. This is something new, and since then I basically just left everything else and started working on that full time since sometime 2014.
Cool. So let's jump straight into the topic of Bitcoin halving, right? Are you guys excited about the halving? What are your thoughts about it? Why is this important in your own words?
I'm excited. It is important because, well, that's the way Bitcoin works, and it kind of goes with the theme of deflationary currency that Bitcoin is. It's also very interesting as a mining pool operator because we see now we're going to probably see new entrants into this market. I think it's a net positive for the mining industry because of that. They will be able to, new mining operators will be able to, know that in the next 4 years it's only going to be 6.25, so that Bitcoin giving out. So they'll be able to, forecast and build farms with that in mind. I think it's ultimately a positive in that sense. So I am excited to see all this new activity in the mining industry that's coming out, yeah.
From a mining perspective, it's really interesting because you're going to see a couple things. One, I think you'll see a lot of the older gen machines shut off, at least the ones that are located in geographies that have higher electricity prices. So you could see a pretty sharp short-term drop in the hash rate. However, what I think may happen is that will definitely be short-term because as we saw from the leap of around 38 exahash for the global network share of hash rate, all the way up to around 122, or 125, which it is now, there wasn't a whole lot of machines shutting off, despite the difficulty kind of skyrocketing during that period. What you see is a short-term shut off, and then the machines change hands and they seek out the cheapest electricity. So especially with the current price increase, I think the margins are still decent enough that you won't see too many of like the S9s shut off that you may expect. For those that don't know, the Antminer S9 is like the most successful mining ASIC out there. There's millions, and you can kind of think of it like the AK-47 of mining machines. It doesn't quit. It's pretty resilient, especially with new optimizing firmware. You can get like 70 joules per terahash, which means it's really efficient for having been released in like 2016. So I think you'll see that. And then also it's kind of exciting from a monetary, like a hard money standpoint. Some people disagree with the term inflation because technically the Bitcoin already exists. It's just kind of like being released. But once after this halving, when the block reward decreases from 12.5 down to 6.25, Bitcoin will officially have a lower inflation rate than gold. So it's kind of the first time that, it's actually going to be more scarce than gold. But yeah, I mean, there's a lot of things that can potentially happen after the halving. I think it'll be much less of an event than people suspect. I think it'll be more of a whimper than a bang. But yeah, I guess we'll just wait and see.
So you, it's very interesting that you brought up the Antminer S9, right? Which is, I like how you put it as the AK-47 of the mining machine. So I'm not really not really very well. I don't follow mining equipment that well, so I'm just curious. Like, what are some of the most efficient mining rigs out there these days? What models? And Antminer, which was like manufactured by Bitmain, has been a mainstay in the industry for the longest period of time. Do you see Bitmain gaining or losing more market share in terms of its mining machineries in the coming year or so, for example?
I think it'll be stagnant or a relative decline. So, and just pure sales, it could increase, but relative to some of the other manufacturers, it could decline in market share. I think this is for a couple reasons. I guess most recently, and that's at the top of my head, is there's a lot of problems currently with some of their newer gen models, the S17 and T17 series. If you run them in perfect environments, submerged in liquid for better cooling and airtight data centers, there's only like a 2% failure rate for those machines, but they've had a lot of problems with the ones that are exposed to any range of temperature. So many people are experiencing upwards of 20% failure rates for their machines. It is theorized that this is probably in large part due to a supply chain shift away from Shenzhen towards Malaysia for a lot of the models, because they really had the process nailed down in Shenzhen for a while, but they sought out new basically manufacturers in Malaysia that didn't have the experience or process nailed down for these ASIC manufacturing. So WhatsMiner basically didn't have those problems, which is their main competition right now, and they were wildly successful in 2019. Their M20S shipped over 600,000 units. I can't speak too much to Canon and Inyo Silicons. I think their market share will relatively decline as well. But I think in the future, you'll see more and more market taken up by MicroBT, WhatsMiner, Shema, whatever name you want to call it.
I agree. MicroBT has been doing very well. And what's actually interesting is that MicroBT shares a similar story to Poolin. These guys all started at Bitmain, just like Poolin, and they left and they started a company that's done very well against Bitmain. Bitmain has BTC.com and Ampool. We're Poolin, and we're doing better than them now. MicroBT left Bitmain and is doing better than them now in terms of the new generation miners. So it's quite interesting note there that basically all former Bitmain guys have started companies and are doing better than Bitmain.
Yeah, I always like to say like this Bitmain thing is kind of like I always like to compare this alumni of Bitmain is sort of like the PayPal mafia. Like these guys graduated from PayPal and then go around and do companies that are worth bigger than what the original company was. But in this case, like the alumni came back, and compete against the parent company, which was detrimental to Bitmain in this sense.
Yeah, it was a bittersweet moment when Poolin took over in terms of hash rate above BTC.com. It was a bittersweet moment, but it was more sweet than bitter, that's for sure.
I was just looking at the mining hash rate distribution, and I didn't know you guys were number 1 and 2 actually now. So mining that very quickly. I was not aware.
Yeah.
Actually.
Yeah, we started mining Bitcoin about a year ago, and we came from nothing, from 0 to number 1. Although I mean, every day F2 pool gives us a good competition, but we're usually number 1. So yeah, in the last year we've grown exponentially. Yeah.
FT Pool, Edward used to work for FT Pool, now Slash. So, but yeah, FT Pool and Poolin are number 1 and 2 now. Yeah.
Yeah,
so that's cool.
Yeah. Thank you.
So I'm curious, right? Talking about the ranks of mining pools in Bitcoin. So like the newest player in the industry is Binance Pool, right? So what are your thoughts about Binance launching a mining pool? I'm hearing that they are charging the lowest fee. And Binance being Binance, they want to be number 1 in everything, and they saw Bitmain being so big and dominating. Maybe they won't get the machineries, but they saw mining pool as an opportunity which they think that they can compete. Like, what do you guys think about Binance? Do you think they're out to eat your lunches, or what do you think they have no chance to compete?
Look. Let me before Edward, because Edward also has some good thoughts about this. But let me just say that a lot of people are concerned about centralization from pools, right, and whatnot. But then let's talk about Binance. Binance already holds most of the Bitcoin in the market. I'm not sure how much share they have, but there's a lot of Bitcoin in this exchange. Now, if you add on top of that a mining pool, that's a disaster. All the Bitcoin is going to be in one entity, and let's not forget that maybe a couple months ago, CEO of Binance wanted to backlog the Bitcoin blockchain.
Yeah.
That's a really bad thing. Poolin said we released, well, our CEO Kevin Pan released a statement on Twitter that we would never ever do something like that. So it is definitely a concern. Maybe not so much for us because we feel confident in what we can do, but for the ecosystem as a whole, it's definitely a concern when one entity that has in the past asked for to backtrack the blockchain is now going to be controlling already much more Bitcoin with a mining pool. They're going to be creating it. They're going to be holding it in the exchange. If you're a mining farm and you want to mine with Binance Pool, you're more or less required. You're not required, but you get all the benefits if you use Binance Exchange. So they're kind of locking their miners in the exchange, which is a huge concern of centralization, security risk. There's so many. It's just down the list. I think I don't think it's a good thing.
Yeah, just to echo some of that, I would be cautious of supporting anyone who's suggested a block reorg of the Bitcoin network because of their own security breach, their own incompetence, to be frank, because it was brought about because their hot wallet was hacked. Someone gained access to it, right? And I think it was like $40 million that was stolen from them or something like that. And to, just because your security wasn't tip-top shape doesn't mean you should try to put the entire network at risk and devalue it for everyone else. But yeah, I mean, by lowest fees, I think you mean zero fees is what they're offering right
you
now.
can always go below zero, negative fees. The oil price.
But basically, that's their short-term strategy to onboard hash rate quickly, right? Because they're doing a PPS payout method, and basically what that means is the pool takes on the risk for variance. So if the pool has bad luck, they have to continue paying out the miners Bitcoin even if they don't mine blocks. So having a pool that's PPS at 0% fees essentially means you have to have unlimited reserves, because when you have under 100% luck, you're just constantly paying out the miners more than you're actually mining. So I think it's till the end of May this month that they'll have the 0% fees, and then they start implementing. They haven't said what price scheme they want. They've made public that if you want to extend the free period, you have to contact them, which just means if you're a large enough miner with enough hash rate, then they'll be nice to you to incentivize you to come on board. It may come with certain strings attached, like you have to mine with this longer if you do that. But there's no real value add. There's no value proposition that they've brought to the space in this way. They've just said, oh, hey, we know miners are like profit seekers in their most base form as the system was designed. So we're just going to try and improve your margins as much as possible by offering zero fees for the time being. But, they're not actually building anything for the mining industry, or providing services beyond extremely low fees for a mining pool.
Exactly. Good point.
Yep. So you guys work in Chinese Bitcoin mining companies before, right? I'm going to ask this question. Why is many reports have pointed out that China controls most of Bitcoin's hash rate, somewhere between 55 to 65% based on different reports that you read. Do you think why do you think this is the case? Why do you think China has such large control of the Bitcoin hash rate? And do you think this is a problem for decentralization? I know, like, whenever people talk about decentralization and they say this mining pool is too strong, everybody asks them to move to SlushPool, which is based in Czech Republic. So yeah, I just want to hear your thoughts on why do you think China has such a strong dominance in the Bitcoin mining industry?
Well, I mean, it's Edward. You want to go first?
Yeah, I guess. I'll keep it short. For me, it's just a couple things. First and foremost, it's supply chain. So the real centralization in the space is the ASIC manufacturers. They're all Chinese companies, and that's where all the machines ship from. So they're always first to market in China, and the industry has developed really well there because of that. Second would be the infrastructure that's been built up in Xinjiang and Sichuan. Sichuan, especially during the rainy season, May through, I think it's like September. There's just such cheap electricity due to hydropower there during that time of year. So when you combine relatively cheap electricity with the fact that all the mining machines are produced from that region, and then you have a kind of neutral stance towards mining from the government from this whole time, then there's no reason why it shouldn't flourish there.
Yeah, and to add to that, I mean, a lot of people want ASIC manufacturers to be outside of China, which I think is a good thing. I mean, look, it's a great. I think having everything or all that manufacturing in one region, wherever it might be, China, whatever, it's never a good thing. We should have it in a global, or at least in many other regions. But the reality is that China has the strongest manufacturing sector in the world. They have all the factories built out. They have all supply chains built out, and they have that all built out, and many other regions around the world are lacking. So it's just the reality of the situation. But we have been seeing a trend in Poolin. One of the reasons why we're actually have an office in Berlin and we're hiring is because we have been seeing a trend of some hash rate leaving or hash rate growing in other regions around the globe, like in Northern Europe, North America, Canada, some parts of South America. So the pools are also moving outside of China, and you need to also keep in mind that a mining farm can be anywhere around the globe and still be mining with Poolin or with whatever Chinese pool, but they could be in Sweden or in Norway. And it also another important point is that a mining farm can change pools very quickly, right? There's nothing like they have to stay with that pool forever or anything. It takes about maybe a minute to change to another pool. So,
all right. So
I have a question.
Yep.
I read some articles that say there's some disruption for ASIC shipment and stuff like that because of coronavirus. Is there any direct influence or damage to mining pools because of coronavirus situation?
Well,
oh, go ahead.
Yeah, I'm going to say mining pools are affected because the manufacturers are all based in China, and there's a lot of miners and mining farms in China. So what's been happening is that these machines are too costly to send out because of the whole logistic prices skyrocketed because of Corona. So what's been happening is that basically a lot of the Chinese miners have benefited from this and have gotten the new equipment quicker than the rest. And well, as a pool operator, we're still okay because these mining farms are connected to us anyway. So.
Just to echo that, the shipment networks within China are pretty much back to normal from what I understand now. So the data centers in China can receive the newest generation of equipment much quicker and for much cheaper, whereas there's been a lot of delays for other parts of the world. So what I think you'll just see is a increase in the amount of hash rate that's in China relative to the rest of the world. It'll be higher than 65% soon. I've never heard the conservative estimates of 55%. I think it's definitely closer to like 65, 70. And I would also note that because of the success of mining in China, a lot of Chinese miners have reinvested into different sectors that have cheaper electricity. So just because the data center isn't in China doesn't mean it's not run and operated by a Chinese company. They do a lot of work in Iran, Kazakhstan, Russia, the other cheap electricity places. Yeah.
So what do you think is going to happen like after this? Once the halving comes by, it's kind of like saying your revenue goes down in half for the miners, right? Do you think? One of this question, Donna Fezzi asked this question. So since the effect of halving will make all miners shut off, mining won't be profitable for many. Won't this lead to some sort of centralization? Do you see many mining farms shutting down, or do you see M&As happening in terms of mining farms, or what do you think could happen? And then maybe talk a little bit more about the hash rate and difficulty as well. What do you see happening there?
Well, I think the form of I mentioned it briefly before. The form of M&A that would come out of this would just be a transition of machines from one miner to another, from the regions that it's not profitable for to the ones that do have cheaper electricity. So I think that'll happen. You're right, the revenue will get cut in half. However, depending on the BTC price, if it does go up, that won't matter as much. Yeah, I mean, it's kind of like we can theorize and speculate what happens, but no one really knows what's going to happen. You're going to have to kind of wait and see. And then also the fact that the mining network finds it's self-regulating, so it finds equilibrium, right? So if a bunch of people become unprofitable, then they shut off their machines. Then it's actually a week after halving that the difficulty adjustment is. So if a bunch of people shut off their machines, then when the next difficulty adjustment comes and there's less hash rate, it's going to be much easier to mine a Bitcoin. And then you'll see some of those machines turn back on until it constantly finds a point where the most people that can profit mining Bitcoin are.
Yeah, the equilibrium is a beautiful thing. That's the beauty of Bitcoin. Now, I think after, like Edward said, there's going to be a week after the halving that the difficulty will still reflect what it was before the halving. So it will probably be pretty high because we actually hit last difficulty adjustment 16T, which is 16 trillion difficulty, the highest it's ever been, all-time high in difficulty. And I don't think it's gonna. Definitely, it's not going to stop. Most miners will try to squeeze out as many profits now before the halving, especially because the Bitcoin price is going up too. So it's a double whammy for them. It's better. It's the best scenario possible, basically, for these miners that were just like hanging by. Now, once the week after the halving, these miners that that have older machines or higher electricity costs will be facing an issue because the difficulty will be still from the last from before, and the reward is halved. So yeah, we do see these miners will have to probably shut down. Now, after, like Edward said, the difficulty will readjust down in this case, and then these guys might get back on. But down the line, as these new mining machines start being, once the shipping recovers and the costs are low again, or whatever it is, and people receive these new mining machines across the globe, then you're going to see them turn on, and that's going to steadily keep increasing the network difficulty, and which will then definitely see the older machines have to shut down. There's no other choice. A lot of people say that the S9s can be sent to other parts of the globe for where it's really cheap, the electricity or whatever the case is, they can run it, whatever it is. But people fail to understand that it costs a lot of money to send these S9s across the globe. So it might not be profitable at all to send it and cost a couple, I don't know how much money. Then, so sometimes, I think S9s are going to be something of the past, and in a couple of months, for sure. And what's great is that this kind of allows for these new mining machines and new entrants to the market to forecast into the next 4 years with confidence. They know how much reward is going to come out. They know that these new machines are tested and they won't be increasing exponentially in power anytime soon. So I think it's like I said earlier, it's a positive for the industry, and I don't see the mining industry decreasing. I see it actually increasing many times. The upward trend in hash rate is going to continue, albeit a momentary drop because of the halving.
All right, so very interesting insights that you guys shared. So coming up to the next question, right? I think Koji can share his opinions here. Let's talk about price movement, right? So a question that Cryptocurrency Asia has been asking. What do you think is going to happen to the price post-halving? Do you think the price will go up further? Will it go down? I mean, everyone's really excited about the halving. You say like price going to go up this year. Well, it did happen. It did go up, but not before. It went down 40% in March. And then it went back up to 10,000. So, well, the price did go up, but we had to suffer through some pain. So, but what do you think what's going to happen in like short, medium term if you guys have to make a prediction on the price?
Well, the answer is nobody knows, but my personal opinion is that historically, after the halving, the price tends to drop a little bit. So I personally believe this is what's going to happen this time as well, just because it has happened before. And then eventually in the mid to long term, because the scarcity increased and just the other two guys mentioned, probably hash rate is going to stay or it's going to increase. So I'm pretty bullish in terms of the Bitcoin price midterm. And the other factor is because of Corona, all the global macroeconomics are hurt and they're like doing more printing of money basically. So it's interesting. Bitcoin is going the other direction now. So that's what I would say.
Sorry.
I'm seeing some of the comments over here. Costa saying the price going to 1 million, and then Claudio saying 1 billion for sure.
Okay. 1 billion.
I hope.
Sure.
We hope so too. So talking about the price, right? Like from your point of view, I mean, the price has kind of a tendency to follow the cost of mining, right? So I guess Alejandro and Edward, you know, what's the rough average cost of mining a Bitcoin these days?
I think it completely depends on the region.
There you go.
Yeah, it could be a huge difference, right? I mean, and that's another reason why it's so popular in some regions of China, is because labor costs are so much cheaper than they are in North America.
Yeah.
You know, if you're paying some of your farm operators like 10,000 RMB a month, you can afford to have a lot more, doing a lot more than it would take to pay someone in Canada doing the same operations, where you also, you know, are providing them healthcare and presumably like somewhere close to a 6-figure salary. And not to mention the construction of the data centers themselves. Speaking with some people that run data centers out in Canada, it can take millions and millions of dollars over the course of, you know, over a year, 2 years to get these things actually built. And then you put the ASIC machines in, which is the biggest part of the investment. So whereas, you know, I've seen some of these buildings pop up in a couple months, you know, over in Citron. So a lot of it, when you look at the cost to mine a Bitcoin, it's a lot of people tend to look at it in how much does it cost in electricity to produce that one Bitcoin, whether it's 5 cents per kilowatt hour, 4 cents per kilowatt hour, and then they look at the price of Bitcoin, and if it's under or what their margin is, then they keep doing it, right? But there's so many other expenses you need to take into account. I think it's much more useful to look at it in terms of the cost to deploy 1 terahash of hash rate versus the revenue you get from 1 terahash of hash rate. And when you do that, you include things like capital expenditure in the beginning just to get everything set up, operational expenditure, because, you know, you're having to deal with a lot more expenses than just paying electricity. You're dealing with labor, you're dealing with construction, you're dealing with repairs, you're dealing with all sorts of overhead. So I guess from current standards, though, like if you're going to try and average everything and throw together an estimate, some people throw out 4.5 to 5 cents per kilowatt hour as a global average, but a global average doesn't necessarily mean that's where you're mining the Bitcoin. So moving forward after the halving, assuming pretty stable, a stable price, I'd say so long as you're under the 4 to 3.5 cent per kilowatt hour range, you're doing pretty well.
Yeah, so I get this question a lot, and actually, you know, a lot of mining pool companies on their sites, they have like Poolin, we have like a calculation tool where you can just put in all the variables. There's a lot of variables to get to that number. The cost of the miner, the cost of electricity, like Edward said, network difficulty, these things have to be considered. And then you take that number and then you can get the cost for you, for yourself, for your mining operation, how much it costs you to create that Bitcoin. So it really all depends. A lot of things in the mining industry, it's very hard to say a broad or a general, you know, to give a general answer of the whole industry, because every single mining farm operation is a completely different story. So it's very hard to get to, but there is mining property, or there is tools online that help you get to a certain number.
All right. So, Koji, I'm going to ask you next, right? So after halving, what's next for Bitcoin, right? What are the sort of developments that we will see coming in Bitcoin? I mean, a lot of people are talking about Lightning Network, block streams going out, building the Liquid Network, and then they're all talking about the tokenization on top of these networks as well. Maybe you can start with a brief intro on what are the differences between Lightning and Liquid, and then what do you see happening in this space?
Sure. For those who don't really understand or not familiar with Lightning and Liquid, Lightning and Liquid are sometimes compared, but they're different. They have different trust models. Lightning Network is so-called second layer technology. So you use your real Bitcoin and use basically multi-sig contract and lock up your Bitcoin. So on the channel, you can send Bitcoin more efficiently. So that's what Lightning Network is. It's pretty trustless, although it's different from on-chain transactions. While Liquid is federated sidechain developed by Blockstream. So you have to trust a group of exchanges. So you basically send your Bitcoin to a multi-sig address where a bunch of exchanges control. And then they give you LBTC And using LBTC, you can send more private transactions. So Lightning Network, there's no sort of different tokens involved, while Liquid is a little bit more centralized, but it's more, well, Lightning is kind of private as well, but like it's a different thing. But they're kind of similar, but they do different things. In terms of features, Liquid is more suited for sending Bitcoin back and forth between exchanges, larger amount of money, while Lightning is better for micropayments and transferring smaller amount of payments. So they do different things. Also, you can build Lightning Network on top of Liquid as well. So that's one of the things Blockstream is trying to do, because Liquid is not really for scalability. It's more for privacy. So they still need to build Lightning Network on top of Liquid for faster and more scalable transactions.
I have a quick question for you, Koji, about Lightning. Sure. When I don't know when this was, but when I was first kind of trying to look into it, I was going through the iOS and Android app stores looking for some of the best Lightning apps to use. And I quickly noticed that there was a big debate in the community of whether you should use a custodial or a non-custodial Lightning wallet. And to me, it seemed like custodial was fine because, like you said, it's for micropayments anyways. If you can't trust a third party with like $100, then it's probably going to be an issue. But what's your stance on that? One, does it really matter if it's custodial or not? And two, do you see that as a significant barrier? Because when I was looking through it, it seemed like Blue Wallet, which is custodial, is by far the most simple to set up. You just kind of click create wallet. You can transfer BTC from your regular SegWit wallet over to the Lightning wallet, and then you just scan something, and 2 to 5 seconds later, it's paid for. Which I actually use a lot in Prague. I think it has the highest concentration of like Bitcoin accepting vendors, and they have Bitcoin ATMs everywhere across the city. So it's useful in that respect. But how do you balance that? The non-custodial version has 100 extra steps and a bunch of things you need to do, versus the custodial ones where you can just kind of plug and play and go.
Right. Yeah, that's a great question. And there's a bit of a divide within the Lightning community as well, right? When custodial wallet came out, I was not a big fan of it because, well, it's custodial, it's one. Sure, Lightning is for micropayment, but if there's trust involved anyways, why would you use Lightning anyways, right? So you can just use like a regular exchange wallet. It's kind of the same thing. So, but now I use both custodial and non-custodial wallets. By the way, have you guys ever used non-custodial Lightning wallets and kind of set it up? And how the whole process?
I know it's hard. I've used Bitcoin Lightning Wallet before. BLW.
Yeah.
I think that's non-custodial, if I remember correctly.
It's non-custodial, right?
Yeah. Yeah, but I remember setting up. It was a real pain setting up a Lightning wallet. Right. That was the only one that sort of worked for me. Sure. The rest, and I don't know if things are getting easier today, but it feels to me that things are not easier today compared to what it was when I tried it 1 year ago. So I don't know what's happening in terms of development. Yeah.
Alejandro, did you want to say something?
Yeah, no, I was going to echo what Bobby said. It's difficult still.
Yeah, it's true. It's still very difficult to use non-custodial Lightning Network wallet for most users. So from that standpoint, in order to onboard more users, custodial wallets are useful. And it just gives you like the first experience with Lightning. Okay, this is kind of how it works. But the most difficult part or confusing part for non-custodial wallets is the concept of inbound capacity. So in your mind, if you set up a channel, let's say I lock up 10,000 Satoshis on a channel, I should be able to send and receive freely like that 10,000 Satoshis. But that's really not how it works. So even if I set up a channel, I have to request a different node to give me inbound capacity. Otherwise, I cannot receive any Satoshis on Lightning. So there's just different things involved, and you have to decide which node you would connect to, and you have to request inbound capacity. Otherwise, you cannot start receiving Bitcoin on Lightning. So just different things. So in that way, I'm right now, I would support both. For certain use cases, I use custodial. For others, I use non-custodial. But at the same time, there's a lot of new technologies and tricks that make it easier to set up non-custodial wallets as well. So, for example, some of the wallets, such as Breeze, when you install the mobile app, they give you inbound capacity in the background automatically. So you don't have to worry about requesting inbound capacity. You can still start receiving, up to like $10 on the channel or stuff like that. So there's a lot of attempts to make it easier to use non-custodial wallets. So I'm hoping eventually we don't have to rely on custodial wallets as much. So to answer Edward's question directly, I use both. And right now, it's better you use both kinds for different use cases. And non-custodial wallets are getting better in terms of UX.
Cool.
What do you think about tokenizations on top of Bitcoin? So it was initially Omni. Initially there was Counterparty, right? And Counterparty didn't take off, or the developers left. Then Omni came about. I think it was Mastercoin. I think Omni came out before Counterparty actually. Omni came about. Tether was it's a token issue on top of the Bitcoin blockchain. And of course now we know Tether is like more popular on the Ethereum blockchain. The ERC20 Tether is more popular than Omni Tether. And then a lot of guys are also attempting to do this. RSK guys are looking to do tokenization on Bitcoin. They have a lot of hype, but to be frank, I just haven't seen much outcome from their work. And also the Blockstream guys, they did a token sale with BTSE exchange where they did the BTC token on top of Bitcoin, but I don't hear much discussion on Bitcoin tokenization. I just want to hear your thoughts. Like, what do you think? Is that a trend that will still has a chance to proceed in the future, or that's it? We'll never see tokenization on Bitcoin. We all go to Ethereum.
Sure. So before Ethereum, there was Omni, Counterparty, and colored coins like open assets because there's no other option basically, right? But they could do kind of simple stuff like sending, receiving, and kind of primitive DEX. But now most of the token applications went to Ethereum. So from that standpoint, I don't think there is newer protocols such as Liquid. You can issue tokens on Liquid as well. And the interesting thing is for tokens on Liquid, you can also use confidential transactions. So you can hide the amount of tokens you've sent and even hide the name of the asset you've sent. So that's interesting. That's an interesting feature that other blockchains don't have. But I don't really expect Liquid to take over all the token applications from Ethereum. They just do different things. But if we want to send tokens more privately, you should definitely use Liquid, in my opinion. And my personal opinion is that I think Tether is a better fit for Liquid than Ethereum. And I was kind of expecting the migration from Ethereum to Liquid to happen, not very quickly, but slowly. So far, Ethereum is kind of dominating, and most of the tokens went from Omni to Ethereum. So the shift is kind of taking time. But if Ethereum starts having issues because of Tether, increasing fee and stuff like that, some of the volume will probably move to Liquid. So different use case. I think Liquid is a good fit for something like Tether. For others, building DeFi on Liquid, for example, that's probably difficult.
Isn't that why it switched from Omni to Ethereum in the first place? Because the Omni fees were insane for Tether in a lot of cases. Okay. Yeah. Do you think that as far as tokenization of assets or just tokenization on Ethereum versus BTC, do you think that there'd be more on BTC or sidechains currently if there was no Ethereum, if there was no crazy ICO boom in 2017? Do you think developers would have stuck with that, or do you think that it still would have kind of gravitated towards Ethereum anyways?
It's hard to say, but I'd probably say the latter. Developers would probably still be gravitated toward Ethereum because it just does more. I mean, it's a trade-off. Some people say it's not very secure, and I completely understand, but it's just easier to do more things using tokens on Ethereum, and it's true.
It was built for that, right?
Right, exactly.
Also, if you can raise $50 million in a day, that helps too.
Yeah. I mean, that was a fun time, like the ICO bubble for me, because at the time I was using still Counterparty, right? And because of the block size debate and clogged mempool, the fee of Counterparty transactions went skyrocketed. It's like, to send $1 token, I have to pay like 60 cents or maybe like $2 sometimes, right? So it doesn't make any sense to use tokens on Bitcoin. But putting a lot of activities and so many kinds of tokens on the main chain has trade-off and issues as well. So actually, there's more value transferred in stable coins than Ether itself on Ethereum now, I believe. So it flipped. So that could create some, perverse incentive for miners as well. It could destroy the security model of mining if there's a lot of tokens that have value. So I don't know if Ethereum can just sustain the current token stuff, but we'll see. If it starts having issues, for example, miners start gaming the Ethereum system because there's a lot more stable coin transfers than Ether itself. So why don't you just kind of mess it up? And then it might come back to something like Liquid or a different sidechain like Rootstock, RSK. So we'll see.
Do you guys realize that there hasn't been much talk about Bitcoin scalability issues in the past, like 1 year or so? I would like to get your thoughts. Like, do you think, I'm not so sure. I haven't really been observing the blocks. Are they full? Are we at full capacity? Are we at 50% capacity? Can we scale furthermore before we get high fees again?
Look. A thing to consider is that the fees, if there's a lot of activity in Bitcoin and the transaction, in terms of transactions, the fees will go up. But people tend to forget that most mining pools provide the fees as a reward to their miners. So this actually helps the bottom line of the miners. Down the line, when the block size or when the blocks halve again in 4 years and then another 8 years after that, we'll see less reward coming in for each block mined, and the theory is that the fees itself will pay for the mining infrastructure, all the miners across the globe. So it is a healthy thing that the fees go up, which then pays more money to the miners, which helps the ecosystem grow and continues to stay as secure as it is right now. So I think it's the way the system works, the way the system, I guess, was intended to do. There's a lot of debate about scalability. I was there with the block size debate. My God, those days were a nightmare. Yeah. It was
go on in some circles. There's still
last halving in 2016.
Yeah. There's still guys. There's still people who are still stuck on this block. I mean, move on, guys. Move on.
Well, disclosure, in 2016, the last halving, I was celebrating with other community members in Japan, including Roger, and at the time everybody is kind of friendly and the market was still relatively small. And 4 years later, it's basically everybody just left. Just community fell apart.
It still shocks me that people are kind of clinging onto that, right? Especially, it just really, and this is another sector of the network where miners are really important because they, in a real way, decide what the real Bitcoin is, right? Where's all the hash rate directed to? Even Bitcoin.com, which is obviously a big blocker and supporter of Bitcoin Cash, most of the hash rate, nearly all of it, I think, going through their pool is going towards BTC because in the end, they're profit seekers. So I don't think it's really a debate that needs to continue to happen. If you want to fork off your own version of BTC and have bigger blocks, then you're welcome to do that. As we've seen, people have done that with BCH and BSV. And I think time will tell whether or not that was a good idea.
Yeah, I think a lot of people in the core community will say, good riddance of these people.
It's funny now because Bitcoin Cash and BSV for miners, so I'm just thinking everything, of course, from mining perspective. it's really just a way to increase your margin now. So you can do coin switching algorithms where you can direct your hash rate between the various SHA-256 coins, and then depending on liquidity of certain exchanges and price points, you can sell them within like 5-minute periods. So you can increase your margins like 2 to 5% in some cases if you start switching between the coins. So if you look at Bitcoin's hash rate, the network hash rate is pretty steady, way up here. And then if you've looked at Bitcoin Cash and Satoshi's Vision recently, it looks kind of like a double helix. They're going to keep inverting over and over and over again because the entirety of the hash rate, like not the entirety, but a good portion of it is just switching between the two.
Yeah, that's crazy.
So I discovered this kind of by accident. So I was looking to, I had to move some BCH and BSV. I can't remember which one. I think BCH. And also I made a transfer from my wallet to an exchange. And I was wondering, I mean, Roger goes around saying that BCH is good for payments, you have fast transactions and all. So I was expecting a fast confirmation time, right? But what happened was I had to wait like 4 or 5 hours before you had even the first confirmation. So it got me really curious. Why is this happening on BCH? The hash rate is high, but what I realized was because of all these miners switching between BCH and BSV and before the retargeting happening, I think a retarget happens every 1 or 2 days, something like that, I believe.
Yeah.
And so all the miners point to BCH, the difficulty goes up, and then after that, all them move to BSV because the difficulty is low, and then BCH is kind of stuck there, and then nobody gets confirmed, which is kind of like it makes both blockchains kind of unusable to a large extent.
Yeah, it's kind of crazy. Yeah. I think Alejandro knows more about this, but during the Bitcoin Cash halving, which of course BCH and BSV happened before last month, and I think directly after the BCH halving, like a block was mined for how many hours was it, Alejandro?
4 or 5 hours, I believe. Yeah, maybe that was when you sent the Bitcoin Cash.
Actually, that was before that. That was in January or February. So there was an issue happening then. But I realized it happened in March as well, I think, during the halving.
Yeah. So most major mining pools have a hash rate switch, and it's part of the game. It helps our miners make more Bitcoin. We do this Poolin, and we don't even pay out BCH or BSV to our pools. We pay them in Bitcoin as well. So it's part of the that's the reality of the situation. It's the mining game. The mining industry is about making money, making profits. It's very much a capitalistic designed system, and if there's an option that you can switch real quick and make a little bit more money, then we'll do it.
And there isn't a whole lot of downside to that either. The only downside potentially, and not everyone really cares, is you won't receive quote unquote like virgin coins, the coins directly generated from the Coinbase transaction.
Yeah.
You'll have to obviously send the BSV and BCH to an exchange and then provide them the BTC from that, because none of them mine it really. I'm sure there's some, but as Alejandro said, when people do coin switching, whether it's for altcoins or between the SHA-256 coins, everyone collects payment in BTC for the most part. They're not interested in holding the other one, so that just creates more downward selling pressure on some of the other projects. So we'll see. We'll see how long it lasts.
Yeah, I mean, they're slowly losing their hash rate share against BTC anyway, so it's slowly becoming more and more relevant, in my opinion. So.
I mean, it's a question of now, like, was it a good decision to stick with SHA-256 algorithm? That's but this is all right, hindsight. But who?
Right.
Yeah, I have no idea what they have to do.
Lightning becomes more usable and more widespread, so we can say, oh, you can use it as cash as well. So done.
Me too. I would love that.
Yeah.
I mean, it's supposed to be the way where we pay for coffee, right? Lightning is supposed to be the way, like go to a coffee shop, pay with Lightning, get a coffee. That's supposed to be the way it's supposed to be done. We're waiting for the day to come by.
It's actually pretty common in Prague, and I know in Japan they do it pretty frequently too.
Yeah,
I bought a camera lens with Bitcoin when I visited Tokyo.
Yeah, but Prague is probably like, come on, in Prague you can buy Bitcoin. It's really big. Prague, Bitcoin is really big in Prague. It's amazing. I love going to Prague and spending my Bitcoin all over the place. But it's true. It's one of the only locations around the globe that has this infrastructure built out around Bitcoin, because there's a lot of big Bitcoiners there. The Slush guys are, since 2010, so they've really tackle the city, and it's great. I love going to Prague.
Yeah, we have Trezor out here too and stuff like that.
Yeah, Trezor
Actually,
guys, and yeah.
I think I was one of the first guys to buy coffee using Lightning. So Lightning Network developer Alex, I forgot his last name. He works for Lightning Labs, and he just set up a He set up a Lightning payment on a random cafe in Palo Alto. At the time, I was just I was in the area, so I was like, I saw the tweet and like we just set it up. So I was like, oh, that's cool. I'm gonna go down and just be the first one to buy a coffee in Lightning. So yeah. It's a cool story for me.
All right.
But it's easy actually. You can really use Lightning to buy simple stuff like coffee. But for larger amounts of payment, like larger than $100 worth or something, it could be difficult. Yeah.
All right, gentlemen. We spent nearly an hour on this meetup. I can't believe how fast time flies, right? It didn't feel like 1 hour at all. Right?
Yeah.
Any last words from you guys before we end this session?
Sure. As a normal Bitcoin user, you have nothing to worry about for the halving. Bitcoin will work just as intended. Security will be strong as it ever was. You have nothing to worry about as a normal Bitcoin user. Miners will be fine at the end of the day. Efficiency, is the name of the game nowadays. And thank you, CoinGecko, for providing this and webinar. I'm very happy to have joined.
For me, I mean, I'm not a trader. I'm more of a just accumulate as much BTC as possible and hold it. My entire salary is paid in BTC, so I can't. As far as price is concerned, for people that are interested in how that may affect them, I would just say manage your risk as any decent investor would. So there's been a pretty sizable price movement upwards up before halving. Maybe secure some of those profits and then hold the rest if you want. Not financial advice, of course. But as far as I'm concerned, I'll just be continuing to hold the BTC, pretty much ignoring the price. Because as Koji previously stated, I'm kind of looking at more of a long-term play for BTC. I don't have any interest in trading or pay attention to price too much. But yeah, as Alejandro said, you don't really have anything to worry about. Just make smart decisions and try not to gamble.
Yeah. For me, I hope more people start experimenting with Lightning and get more interested in that. On the surface, it might seem there's not much going on, but underneath, there's a lot of interesting stuff happening, different newer standards to improve UX of Lightning and stuff like that. It kind of feels like, right now, Lightning feels like Ethereum before ERC20 token standard came to be. So around the time there, it's very difficult to just use tokens on Ethereum as well. And all those projects are not interoperable, but Lightning, that's what's happening now. There's a conversion of standards, different new tech. So I hope more people will just pay more attention to Lightning as well. That's it.
All right, sounds good. Thank you very much, Alejandro, Edward, Koji, for joining us on the meetup. I think your last words kind of summarize up a lot of the questions that people have been asking the chat group. Kind of sum up very simply some of the questions. I hope all of you enjoy. We still have 150 live attendees towards the end, so very happy that all of you stayed on to the end. For today, thank you. We have a special gift for all of you. So I've just posted a comment here. Thanks for attending the meetup. We are giving a free $5 coupon for any of you who wants to buy some merch on CoinGecko store. So use the promo code CoinGecko5 and you get $5 off from some CoinGecko t-shirt. I'm wearing one, you can see here. CoinGecko bottles or you get a How to DeFi book that we just published recently as well. So just want to say thank you very much to all of you for joining our meetup. Very happy to hear that see all of you here. If you have any questions, any feedback, feel free to drop us a line at hello@coingecko.com and we would love to hear your feedback. And once again to our guests, Koji, Alejandro, Edward, thank you very much for joining us on this meetup.
Thank you, Bobby. Appreciate it.
Thank you, guys. Appreciate it. Go Bitcoin.
Go Bitcoin, yes.